So in the last 2 months, something flipped in Dubai's villas market that almost nobody's talking about it. Secondary ready resale villa sales jumped 56%, off-plan villa sales fell 24%, and for the first time in a long time, the median price per square foot on the resale value is now actually higher than the off-plan. Buyers are happy to pay premium to move in today rather than wait years for the handover. That is a real shift, and I pulled the actual DLD-sourced transaction data to show you exactly where it's happening. This video does 3 things. First, every major Dubai villa community using both the annual picture and the last 2 months of real transactions. Second, I'm directly answering the biggest international warnings about this market, which is UBS, Fitch, the oversupply headlines with the real data, including the market tightness number, which I haven't shown you before. And third, a few minutes on how Abu Dhabi's villa market compares to Dubai or anywhere else in UAE right now. This is a long one, let's get into it. Here are 4 things I'm scoring every community on: price and positioning, growth signals, yield and rent, and buyer profile. Now, one methodology note before we start, because I want to be precise with you. You'll hear 2 different kinds of number in this video: annual price index growth, which tracks like-for-like value change over a year, and recent median transaction prices, which reflect whatever mix of properties actually sold in a given window. Both are real, but they answer different questions. I'll always tell you which one you're looking at. So citywide, the official villa price index rose 9.86% per year as of April 2026, outperforming apartments at 5.49%. But a year earlier, Q1 2025, villa growth ran as high as 17.8%. So the annual pace has moderated, but villas remain the stronger residential asset class. So if you look at Bayou, their H1 2026 report names Damac Hills 2, Mirdif, and Dubai South as the leading affordable villa communities by buyer search volume. Arabian Ranches 3, Damac Hills, and the Valley as the most searched mid-tier communities. Soba Heartland as the standout luxury performer, and Al Barari and Jumeirah Islands for all the significant ultra-luxury transactions happening in Dubai. So that was the annual picture. Now let's look at what's actually happened in the last 2 months, and this is where it gets genuinely interesting. So before we move to the next part of this video, understanding these numbers will completely explain you whatever I'm going to speak about in this video in the later parts. So from 10 June till 9th August, there were total 2,680 transactions happened for the villas. And if we compare it to the last year, that is 4% upward trajectory versus the prior period. Got it? And if we segregate all of these transactions off-plan by secondary, so in off-plan, there were total 1252 transactions happened, which is 46.7% of the total share of all the villas being transacted, secondary and off-plan. So 46.7% was the share of off-plan with 1252 transactions, which is, if we compare to the prior period of the last year, that is down by 24%. Now let's have a look at the median price. What was the most transacted price? Like, what is the average price out of everything? Now, the median price is not the price that I want you to focus on, but if we look at the price per square foot, average price per square feet of the most transaction in off-plan, they were happening in this price bracket of 1,290 per square feet. Now this explains us and give us some kind of a signal what kind of villas to pick right now in the off-plan market. Now in the secondary, there were total of 1428 transactions happened in the last 2 months. This is 53.3%. This is versus the prior period. The transactions are up by 56%. And the median price for the secondary villas, which is important in the secondary, the median price, this is the 3.8 million, which gives you some kind of an idea how much prices have appreciated from the previous launches till now in the ready market. And these are the accepted prices. These are the accepted prices by the volume of buyers who are looking for villas right now in the market of Dubai. And the average price per square feet was 1380. Now look at this and look at this. These two numbers I'm going to talk about in the later part of this video. Now, for the first time in a while, ready villas out-transacted new launches, and resale is now commanding a higher price per square foot than off-plan. Buyers are paying a premium for immediate handover instead of waiting for years. So the question is, which sizes are actually moving? So 3 and 4 bedroom villas, roughly 2,000 to 3,500 square feet, are where this entire market lives. About 80% of secondary volume and 60% of off-plan volume. But on the secondary side, 3 bed and 4 bed are effectively tied and both are booming. 3 bed up by 55%, 4 bed up by 77%, and 6 bed secondary segment jumped only 128% off a small base, and the 6 bed secondary segment jumped only 128%. Genuine ultra prime resale liquidity returning at around 2,690 per square foot. On the off-plan side is the opposite story. 4 bed off-plan fell 47%, 5 bed fell 28%, 7 bed fell 42%. Large format off-plan is cooling hard while large format resale is heating up. Now, where this is actually happening, the honest version including the numbers, I won't oversell you on. 2 off-plan communities posted enormous headlines growth. Dubai Investment Park first up by 137% and Jebel Ali first up by 295%. But I want to flag something before you get excited about those numbers. The reported yields there are 15.4% and 34.7%. Those are almost certainly a small sample. But if we are comparing brand new low price sales against older rent contracts on the same or similar units, I would not take those yield figures at face value, and neither should you. Now, where the real sustainable demand actually is, the Mac Lagoons leads secondary activity with 154 transactions up 31%. And Al Yufra 1, which is basically the area name where the Mac Hills 2 and the Valley communities and Shobha's new sanctuary off-plan community is already located. This is the part which is called as Al Yufra 1, and I'll show you on the map all of these communities once I explain what kind of areas are right now overheating with the resale transactions. Arabian Ranches 3, Emirates Living, the Mac Hills 2, Moudon, Tilal Al Gaf, and Dubai Hills Estate all shows consistent real secondary transaction volume. So let's just balance things here, because I show you the bad news too, right? The Mac Islands 2 off-plan volume fell 87%, and that is a genuine cooling signal in a specific community. But this is not a citywide pattern actually. Now, the rental market is also telling a related story. Now, new leases growing while renewal shrinks mean tenants are actively moving, not staying put. They are likely pulled towards newly handed over supply. New leased rents sit only about 5% above the renewal rents, which is actually a modest gap by Dubai standards. And it also suggests that rental pricing power is flattening rather than accelerating in the market. Now, the single most useful number in this entire section is the absorption rate. Now this is the most useful numbers, which is very important, and I have seen many people don't even bother to talk about it, which is the absorption rate of the total Dubai villa market. So before I go into the later part of this video, understanding these numbers is very important to understand the rest of the part of this video, how I made my opinion. So how I look at the absorption rate of Dubai, please let me know in the comments if it makes sense to you. So the total live supply of listings of villas on Bayut is 12,797 listings, and if we break this number into ready versus off plan, that is 5,503 ready listings and 7,294 off plan. So the rental listings is 15,797. Now, understanding these numbers is very important, because what I'm going to show you the calculation so that you will have a complete idea how Dubai villa market is currently considered to be as a safe investment strategy. So before we go further, we look into how many transactions per month happening in the ready market. Now, if you look at the secondary villa transactions going on, there were total 740 sales per month happened, and the ready listings, as I told you, was 5,503. Now, if we calculate this number and we end up finding out
that is around, if it goes like this, the total supply of the villa, if you look at that number. So if you look at the total supply of the villa market and we compare this number with each other and calculate if this is the rate of villas being sold in the market, then how many months of current inventory being left in the market. So that makes up to the number of 13% monthly. So if it goes all like this, 13% every month, we will be coming to a total of 7.7 months of inventory. We only have in the whole of Dubai market only 7.7 months of inventory if the transaction will all goes with the rate of 13% every month. And if we compare all villas combined and if we try to find out how many transactions in total happen in both kind of categories of villas, which is off plan and secondary, and we compare that with the current absorption rate of the villa market, so the total transactions were 1340 in the past 2 months. So the total transactions were off plan versus ready were 1340 transactions per month versus the total number of listings, the live supply on Bayud was 12,797. So if we find out the rate of absorption through these numbers, we come to the conclusion of 10.5% of monthly rate of the villas being sold, being absorbed in the market. Now if we compare it with the current villa supply of Dubai market, that comes up to the 9.6 months of total inventory if it all goes like this. Now before you go to the later part of this video, understand these numbers as well. The total rentals is 1880 new leases happened monthly in the past 2 months versus 15,797 versus 15,797 rental listings. Now if we find out the rate of how many villas are being rented, how many villas are being absorbed in the rental market, that comes up to around 11.9%. That is approximately 8.4 months of inventory.
Under about 6 months of inventory is generally reads as a seller's market. 7 to 10 months is balanced to soft market. Now this villa market right now reads as balanced, with secondary generally tighter than off plan. Now you can treat this as a directional, but portal listings carry some duplications across agencies, which can inflate the denominator slightly, but it's the most honest read available right now on the internet. And here's something I want to be completely straight with you about. I went looking for actual occupancy rates by community for this video. The real percentage of units occupied versus vacant, I could not actually find it. Neither DLD's public data nor DXBinteract publishes true occupancy. Now the communities with the heavy consistent leasing turnover and solid yields are Damak Hills 2, Mirdif, Emirates Living, Town Square, Arabian Ranches 3 and Villanova. Now very low yields alongside high rents like Dubai Hills Estate at 3.62 and Arabian Ranches 1 at 3.2 usually reflect a capital values running ahead of rents, not vacancy. Now with that micro data fresh in mind, let's go through the 3 biggest international warning about this market honestly. So the claim UBS had made that Dubai now ranks among the world's overheated property market alongside Geneva, Amsterdam and Los Angeles, with the inflation adjusted prices at highest since 2014. And we just calculated the real absorption, which is roughly 9.6 months of inventory across all villas, 7.7 months on the secondary specifically. Now by the looks of it, that's a balanced market by any standard of industry benchmark. Now Fitch also claims that the flood of 210,000 new housing units is going to hit in 3 years average, and it could trigger a double-digit price decline as early as 2025 and late 2026. Now the honest response to that is this is the oversupply warning, but look at what's actually happening on the ground. Off-plan villa transactions are down 24% in the last 2 months, specifically in the largest unit sizes. down 47% on 4-bed, 28% on 5-bed. Now that's the market itself pulling back on new supply absorption before Fitch scenario even plays out. Now the scheduled supply and what the market actually absorbs are two different numbers, and right now demand is visibly rotating towards the ready stock instead of piling into new launches, which is itself a correcting signal. It is not a warning sign that you have to understand. Now Reuters said the same thing. Now to that you can also look into S&P Global's own read on this same data is price stabilization, and they are not indicating any kind of collapse. And now we have transaction level proof of what stabilization actually looks like in practice. Balance is 7 to 10 months of absorption. Buyers are more rotating towards the ready stock at a premium over off-plan, and the large format off-plan villas are pulling back on its own. Now that is a market adjusting in the real time. So the skeptics are right that Dubai is expensive relative to its own recent history, and that a lot of supply has been announced. They're making a narrower claim than their headline actually suggests, because the actual transaction data is cash heavy, balanced inventory, demand rotating rather than collapsing. This actually points to moderation, not the crash. Now the tier 1 in Abu Dhabi right now, which is Saadiyat Island, right now it sits around at 26,500 per square meter, which is roughly 2,460 per square foot. Now this is obviously well under Dubai's ultra luxury tier. The Al Jubail Island posted the strongest annual villa growth in the Emirate at roughly 40%. Now what Knight Frank report says about Abu Dhabi right now, their feedback on the Yas Island is something that we should pay attention to. Now as per the report, Yas Island is the value luxury yield play, and the villas from the 3 million dirham mark are up over 15% in the Q1 2026. Net yields around 7.5% versus 5.8% on Sadia. Now this is a Knight Frank report about the Yas Island. So the honest takeaway here is this, that Abu Dhabi offers a lower entry point and real prestige tier, which is the tier 1, which is in on itself is a scarcity. But what it doesn't have yet is the Dubai's decades of liquid resale demand, the exact resale strength that we just spent 10 minutes proving with real transaction data. And this is the most important thing whenever you're looking for the first property in UAE, that you need to be safe and you want to have the patterns and the data in front of you so that you can understand as an investor that what could be the projected prices, what could be the absorption rate of that specific kind of an investment that you're doing. So if you want the immediate move in and you're not afraid of paying a small premium, the secondary 3 or 4 bed in Damac Lagoons and Al Yufra 1, which is Valley Sanctuary by Shoba, or Urban Ranches 3, this is where the real sustained demand is concentrating right now. Don't chase a headline yield number, verify always against the real comparable rent contracts first. Now if you want proven rental income with real turnovers, Damac Hills 2, Mirdif, Emirates Living, Town Square or Villanova, these are the communities to look for. If you want Dubai's ultra luxury tier, then always Al Barari, Jumeirah Islands, and if you're going to Abu Dhabi, the Saadiyat Island is your tier 1 kind of an investment if you're buying something ready today. So that was the full picture, the annual trend, the last 2 months of real transactions, an honest answer to the international skeptics, and briefly how Abu Dhabi compares to Dubai's villa market. So if you want the same level of analysis, and if you want me to run numbers or make a report on a certain communities, a certain asset class, what kind of assets are weak assets in a certain community, what is the absorption rate, and you want to understand all of that within a 30-minute call, you can find my WhatsApp number on the screen, and also it is mentioned on the description below. You can chat with me and we can book a call and let's have an honest conversation one-to-one and understand your objective. My only concern is with my investors is that they always make money, and when you work with me, I go really deep into whatever the asset class that you're buying into so that you will have a complete confidence of the expectation that you should have by the time it will be handing over, and even the post handover period of 3 to 4 years, like how the prices are looking like. So I hope I added some value to your information. Thank you for watching. This is Matlub Ahmed Khan.